Hello traders, well we're in the unusual position here in the Asia Pacific region today of waiting for the other shoe to drop, because on Friday night the Republicans withdrew their planned repeal of what's known as Obamacare, the American Care Act, and so this was seen as a potential problem for markets. There have been a lot of promises made by the newest administration, a lot of muted policies, but so far they've had little success in getting any through the two houses of parliament in the US. And so I'm a little surprised the US markets did get an opportunity to react to this. This came out about 2 hours before the close of trading. And while there was an initial sell-off in the S&P 500 in reaction, markets bounced back and actually finished higher than they were when it was announced that this attempted repeal would be withdrawn from the floor. So it looked like US traders had a chance to react and backed away from any concerns around it, but that's not the case in trading here this morning. In Asia Pacific trading, we're seeing the US dollar under real pressure, falling away, and that does suggest the rest of the world is not as sanguine about the prospects for change in US politics, and we could well see a delayed reaction in US markets tonight. So one we're watching for very closely. I'm just going to start, before we go to the calendar, bringing up that S&P 500 chart, and if I take it back to a 1 hour chart, you can see from this that there was an initial reaction on Friday night, but then a bounce back. Let's just pull that up closer. We'll zoom in a little on that one, say on a 10-minute chart. And of course, Friday night is what we're looking at, and it was this initial sell-off here and then the bounce back that really tricked me. Nonetheless, that's not the first time market reactions have surprised me, and I'm sure it will happen again. And there's plenty for the markets to look at this week. Although we're in the last week of the month, and traditionally a data light period, we do have some releases for traders to keep an eye out as potentially market moving. Now, you can see from the calendar here, there's not a great deal on in the first few days of this week, but once we get to Wednesday night, the 30th, we've got the weekly petroleum data. Now, crude oil stocks in particular have been a major cause of market volatility. You'll recall a few weeks ago it was that huge build in inventories that saw oil sell off hard by around 10%, and so the market's watching closely there. We'll get some consumer confidence readings in Europe, some CPI indications, early indications in Germany. Now, CPI obviously very important with the ECB backing away from potential further accommodation at its most recent meeting, most recent statement, and so any fallback in inflation could be bad news. You'll see that market estimates are for exactly that, a pullback from the previous 2.2% reading in Germany back toward 1.8%. And while Germany is certainly very important and the largest European economy, there's others that may offset any fall there in German CPI, but potentially one that could affect the DAX, particularly given its lofty valuations. Jobs data in the US will be important. Unemployment claims coming out. We'll also have the final read on GDP, not expected to deviate too much from that 2% at the previous indication. We've got inflation data in Japan, and if it does surprise and comes in well above market, it could be potentially market moving. If, however, we continue to see these fairly tepid numbers in CPI, it's not a positive for the Japanese economy nor for the Nikkei. We'll also see jobs numbers alongside those, but then we turn to China for the PMI index. This is the manufacturing read, very important, particularly for those playing the Australian share market. Impact on iron ore stocks in particular could be significant. House prices in the UK, employment data out of Germany, and then we head into the end of the week with GDP out of the UK, and this will set the base for the Brexit, because of course Brexit will be triggered during this week, formally brought forward, and the 2-year withdrawal process will formally begin. We should see an announcement on Wednesday night, our time, around that, possibly Thursday night. We're not expecting a major market reaction to that. Obviously, it's very well flagged, but any accompanying commentary has the potential to at least affect sterling and the UK 100 index. Now we'll round out the week with a CPI flash estimate out of Europe. Now this is the inflation reading we'll be watching very closely. You can see in line with expectations for the German experience, there's expected to be a slight pullback in this reading for the year on year, back to 1.8%. Now very important, any number above that could spark a strong reaction in Euro-US dollar. The Euro-US dollar pair has been moving high, Euro strengthening of recent, and a large part of that has to do not only with the improved manufacturing and services activity in Europe, but those hints from Mario Draghi that additional accommodation is now off the table. So that CPI number, a very important one come Friday night, followed by personal consumption data out of the US. Now, two charts I'd like to look at this week. First of all, we've had a bit of a look at that S&P 500. I'd like to go back to the daily chart now because I think it's potentially showing a double top formation here, falling away from just below that 2400 level just over 2 weeks ago, and now appearing to be breaking what could be the trend line up here. So if we do see an adverse reaction tonight, clearly that would add to the negative picture that we're seeing on this chart. And if it were to break through the 2300 level in the next few sessions, I suspect too, having formerly served as resistance, slicing through that support would be a negative for the S&P 500. The other chart I'm watching closely today is dollar yen. Now this is what gave us the clue first thing this morning that all might not be well with that reaction on Friday night to the news that the Healthcare Act was not going to be put to the US Congress. And so it was this weakness in the US dollar that really tipped Asia Pacific traders off, that we could see a delayed negative reaction, and it's that ongoing fall in dollar yen that's weighing in particular on the Nikkei. You can see that we've had an enormous build up to those levels, and yet if we look to a Fibonacci retracement here, you'll see that we are still, at least according to organic theories, potentially have room to move down to this 61.8% level. Now 50% can be a turning point, but given that momentum, in my view, I think we're more likely to see a test of these levels around 108. So certainly one to watch out for. If there is a sudden turnaround in the US and US dollar strength resumes, then that could take all bets off the table. But for mine, over the next 24 to 48 hours, the risks are for a weaker US dollar, and it's why I'll be watching this chart so closely.